Okay, good evening, everybody. We're going to give it about a minute or two. Let the folks who are in the waiting room get in the room. Let those who are here ensure their audio connection is established. So 1 or 2 minutes and we'll get started. Hello, Bob. Good to see you. Hi, Perry. Good evening, everybody. I can't believe it's already Thursday. The weeks are flying by. It's like we were like, oh, January's over. It's almost halfway through February already. Blink and time is flying. All right, we have a good crew. Let's get started. Welcome out, everyone, to the Market Watch Group Trading Foundations course. This is if you were starting from scratch, what are all the elements? I always use the metaphor of trading like building a house. Everybody's house is different size, shape, style, color. What's the basis that every house needs? That big, deep, strong slab of cement. You get that right, you can build anything you want, whatever it is you want to build. If you don't get that right, whatever you build is going to topple, right? If your cement structure is wrong and weak, if it's not deep enough, if it's not allowed, right? That's what we're looking for here in this course is everything in place, rules, risk, structure, I mean, all of it, everything that you should be doing. So if there's any part of your trading plan where you're like, this is not as strong as I'd like it, but I guarantee you there is a trading foundations concept that matches it. So that's why we're here. Now, I say all that because hello, Leonard. Good to see you. Welcome. Glad to have you back again. Um, fundamentals. Oh, fundamentals. The role it should play. He's not here tonight. Press, if he's going to listen to the recording, asked about it the other day. What about fundamentals? What's the role? And if you hear fundamental, you can't really call them fundamental traders. And that's the point. At the end of the day, whatever it is that you're using to evaluate what you're going to trade, we have to have something that tells us when. And that to me is the problem with fundamentals. I have nothing against fundamentals. I would, if someone's like, Scott, I'm looking for stocks that have a low PE, strong sales, strong revenue growth, blah, blah, blah. I'd be like, great. I mean, I'm sure a stock like that's going to catch the attention of institutions. And those institutions are going to buy it, and that's going to cause the price to go up. Now, hopefully, if it's a leading stock in a leading sector, I found it because I look for leading stocks and leading sectors with good liquidity. We have certain criteria that we want, but at the end of the day, if you use a mechanism like this, process to evaluate and assess and say, I'm only going to and weed out other stocks based on fundamentals, okay, I have no problem. A lot of people have to. They feel like it's just in the back of their mind, they feel like it needs to be a part of it. I don't think it does personally. But I'm not going to be an impediment to those who want to incorporate that. I said this yesterday. I can't remember now. All the classes sometimes blend. When we think about technical analysis and rules, I don't care if you're a trend trader or a position trader or a swing trader. Even if you're an investor, I would still say everyone would benefit from finding a support level and buying after that. And then whether it's a 5-year weekly chart or a 6-month daily, whatever it may be, where you're just simply saying, hey, let's get in when we see that the buyers are taking control. Demand is outpacing supply. Great. That's never a bad reason. So today we're just going to look at the depths and the characteristics of fundamentals and What role can they, should they, will they play for you in your trading? This is light. We're not going to do any heavy analysis. It's a very funny story. But when I was, I'm hitting year 25 in trading. So this was in the year 1999. I was out of college. I had started a business that, had hit and miss success. So I was interested in a career that I was pursuing, and I was working at Fidelity Investments on the trading desk. I worked on the options desk there for a few years before the market crashed. After that, I switched gears a little bit after the market crashed in education. But the thought process when I got there was, what's the name everybody talks about? Even 25 years ago, what's the name? Warren Buffett, Warren Buffett, Warren Buffett. Peter Lynch of two, because I was at Fidelity, Peter Lynch was kind of at his tail end. So I bought his books, and I said, well, let me buy Warren Buffett's books. Well, he doesn't have books, right? He doesn't write books. What he says is, well, these are the books I started with. He was a protege of Benjamin Graham. So he gave a couple of these fundamental books. I realized quickly. Security Analysis was one of them, and The Intelligent Investor was the other. And oh my gosh, I'm like, oh, I couldn't. I mean, it was balance sheets and profit loss. And I mean, look, I don't doubt that for what he's doing, that's helpful. But if you're looking to trade, that's not information that's going to move this thing over the next week, 2 weeks, possibly 2 to 3 days, depending on market conditions. So right off the bat, for me personally, I would say the only role fundamentals would play is a filtering role. It can help you filter and find the right stocks. That's the preview, but let's dive in. Disclaimers, as always, education, illustrative only. We're not advisors, guidance, etc., etc. So let's do a quick intro to fundamental analysis. You might even be like, well, what do you mean fundamentals? Right? This is the foundations. Is there a big difference between foundations and fundamental? We'll talk about what exactly fundamentals is. We'll talk about market fundamentals versus stock fundamentals. So in that regard, I am a fundamental analyst. Market fundamentals are very important to me. The strength of the market, labor strength, Fed and interest rate, direction and expectations. It might be earnings. It might be real estate report, whatever it is, right? There's a lot of economic data that represents the fundamental basis of the market. Then we have stock fundamentals, the fundamentals of each individual stock. Find your level. We'll talk about what that means. Risks and limitations of incorporating fundamental analysis. We'll talk about how do you combine fundamentals and technicals. Blended approach, balanced approach, as always, in most things is going to be your best bet. Adopting fundamental analysis routines. Where would they go? How would they look sitting in your trading plan? Sum it up. That's the agenda. Let's dive into it. Questions as they come, comments as they come. I always feel like it's more interactive, and I know sometimes it's easy at night to just settle back and listen. But yeah, questions as they come up, just throw them out there. Comments, anecdotal situations where you've seen it, very helpful to have dialogue and banter amongst the group. Intro to fundamentals definition. Fundamental analysis is a method for evaluating a company's financial health and intrinsic stock value. Financial health, intrinsic stock value. What does it look at? Looks at all kinds of different things. Debt, income, revenue, profit, sales. Looks at 1 year, 5 year, 10 year, year over year, month over month. I mean, it's anything that it looks at different valuation ratios, price to earnings, price to earnings to growth, PEG ratio, book to value, debt to income. A lot of different ways. What makes it hard is it's very much sector and even industry group specific. Meaning what? Meaning I'm not going to look at Citigroup and compare it to IBM. But those are apples and oranges. So when people are like, "Oh, the S," some people might look at the historical average PE ratio of the S&P, right? Of the S&P, and they compare it to where we are. Again, that's more of a market. But if you're going to look at a stock and compare it to its peers, it's got to be its peers, which is within its group. So by doing fundamentals and incorporating it, anytime you're looking to add, it's like, well, I've got to look at, this stock relative to 10, 20, 30 that are in its group. And it just adds a significant extra step, I guess. Again, I'm not trying to dissuade you. I'm just saying. I'm just saying. Significance. It's crucial. Well, that remains to be seen in stock trading. Guiding decisions by assessing financial stability, growth potential, alignment with financial goals. I believe in money flow. I believe in momentum, sector rotation. That's fundamental, but that's a market fundamental. I mean, I'm using a technical analysis to assess the fundamental strength of where the money flow is going and what does that interpret within the business cycle, I guess you would say. The objective with fundamental analysis is whether the stock's market price reflects its true value, which then would create a story or a narrative around its ability to appreciate based on increased expected valuation. So you'll hear there's two. I don't know if I talk about this. Maybe I do. I'm gonna throw it out right now. Remember that even within fundamental analysis, there's a couple of core thought processes. You have growth mindset and you have value mindset. So growth is, are they improving sales 15% year over year? Revenue 15%, even 25% if you really want like a high growth, right? Do they have a high price peg ratio? That's more of a growth story. Valuation would be, are they low PE ratio right now? Are they low book to value? Are they low debt to income? That indicates that right now is a good time to buy, right? A lot of times the value plays occur more after like consolidations in the market. So, all right. The scope. So we're thinking about market versus stock fundamentals. Market fundamentals concern broader economic financial dynamics, while stock fundamentals focus on individual company performance. We talked a little bit about that already. The scope. Market fundamentals consider macroeconomic factors, interest rates, jobs. We talked this already. Whereas stock fundamentals concentrate on a specific company's financial data, current position, particularly amongst its peers, its group, right? Best in breed is the thought process that we're trying to implement with this. The application is that we're hoping market fundamentals help with asset allocation and market timing, not really. Stock fundamentals can guide stock selection for sure, and an analysis for investment. Market timing is going to be tough. I mean, the only way you would ever assume that is if you're saying, I'm waiting for the fundamentals to change, which happens when? This is a good talking point. When do the fundamentals change? Price changes day to day. So technical analysis is about momentum. It's constantly in flux. But fundamental analysis changes. If you include analysts, then there's random bursts when an analyst posts something and says, oh, we're downgrading, we're upgrading. But for the most part, it's quarterly at earnings. And they say, oh, here's what we did. This was our earnings per share. This was how much our sales increased. This is how much our revenue increased. Then they give you, here's what we expect going forward. Now, that's their expectations. If you read an analyst report, you're looking at somebody from an investment firm who's analyzing and producing a report who says, let me give you my analyst opinion. Does that mean it's objective? No. I mean, it was, 20 years ago, it was quite shady. The analysts were straight from the brokerage houses, with a little left hand, right hand scrubbing each other's back. Not anymore, but still, take it with a grain of salt. Market fundamentals, broad market economic and financial factors that will influence quite a lot. Right now, we've been looking at strength across the board, jobs the whole time, looking at stronger GDP, looking at decreasing inflation. That's all fundamental information that has increased our bullishness in the market and said, yeah, this is what it looks like. Market sentiment, even, we look at that as well. What's the application? Market fundamentals inform strategic decisions in asset allocation. What sectors right now? We like technology. We like communication services. We like financials. We like industrials. We used to like consumer discretionary, but that one's a little fallen out of favor. We're a little more skeptical of that. So how we allocate risk, if I'm saying, hey, I'm willing to have 8 to 10 trades, well, that's going to be probably a couple from each of those. That's 8 trades. Now I can spread it across where the money is all flowing in my direction. So it definitely helps us to think about asset allocation and risk management. Helps us to identify the trend of where the money's going so we can get there and how much risk we're willing to take in each of those areas. Super important. So I guess I should take it back. I'm very much fundamental analyst on a broader scope. The general in me who's walking to the top of the hill, who wants the 30,000-foot view to see everything a little more clearly all at once, definitely fundamentals. But the general, or excuse me, the sergeant, the foot soldier who's in the trades, I don't care. I'm worried about this trade, just this support level, just this candlestick. The price to book ratio is not going to impact this candle to tomorrow's candle. That information's known. Everybody knows that information. Everybody's known it since they last announced it. And that's only the newest valuation. When they look at quarterly things, they're saying, all you get is one new quarter. Everything else is the same. As you look at trends, you see where it fits relative to the prior trend. That's it. That day, everybody reacts, and then it's known, and it's no longer all that useful of information other than just to simply say, I prefer things of strength. Now, stock fundamentals, that's really where, for me, I'm not seeing now. If you're an investor, that's maybe a trend trader, definitely an investor. If you're a swing trader, I don't think you need to spend the time. If you want to, if you like to, well, my friend, have a go. If you're an investor, then yeah, this is important. You want to know that their return on equity is good. They have a high, they have an effective leadership in turning profits, that they are profitable, that they're growing sales, they're growing revenue, that they have a strong price to earnings to growth. I would say if you're an investor in a bull market like this, you're looking for growth. If we have a correction, maybe back in November, late October, early November, when this thing first started breaking out, you might have had a few things on your radar that were good values at the time, but the market's made a big enough move that you might now have shifted to a growth focus. Let me ask you this, just to get a little conversation going, because I feel like everybody's just sit back, relax. Do you personally include fundamental analysis in your trading plan? Yes or no? Just yes or no. That's it. I want to know, and I'd love to get a great response here. Bob was fast. He said, nope. Okay. We're looking to evaluate individual companies' financial health and growth potential. We look at earnings, we look at revenue, debt, growth, balance sheet, profit, loss, and we basically look at all those business statistics and we say, does this look sustainable? Does this look like they're going to make more money? If the more money they make, the more people are willing to pay for that stock, right? So now, can things move without good fundamentals? Look at the late 90s, 2000. A lot of that had no fundamentals, but it was rallying because the herd was there. So you don't need it. That's what I'm saying. If momentum's there, you don't need fundamentals. But fundamentals can certainly provide a mechanism to filter it down. I'm a big fan of like the IBD. I only have like one person answer. Come on, you guys. Talk to me. IBD, Investors Business Daily. It's a great publication. Their IBD 50 is a great list. I think you could, we're thinking about doing a trading experiment. I'm thinking about using the IBD top 50 current list as the pool to make it random. So, I was going to say we could use ours or we could do a random pool. I don't know. Maybe we'll do one time and then another time we'll switch it and see what the difference feels like. But all right. Quiet. I'll let you be quiet. That's fine. What are we doing? Using stock fundamentals for selection to determine if the stock's price aligns with its intrinsic value. Is it a good investment? That's the question. If you're looking to be an investor, yeah, answer that question for sure. For sure, you got to scratch that itch. When it comes to fundamentals, what's the key? Find your level of analysis. First and foremost, what type? What type will you use? I'll tell you what, if you're a member of this group, you are a market fundamental analyst. Absolutely. That information is critical to us. We always know what's going on in the economic calendar. We always know what economic information is influencing the market. We always know what is it that traders are thinking about. We haven't talked about really everyone for a while. Everyone's like, oh, is this going to be like 2008? No. You'll notice no one's talking about real estate reports or no, it's fine. There's some pullbacks. Of course there was pullbacks. Interest rates jumped. Prices skyrocketed. Of course there's going to be some pullback. It's been mild. It's been regional. Yeah, we don't talk about real estate. That's not important. What's important to us? Obviously inflation. Primary consideration. Secondary, jobs. Why? Because those are the two things the Fed said that they're watching. First and foremost, is the inflationary data is the inflationary data coming down towards that 2% level? 2.5 is acceptable. They're looking for 2. Secondly, what kind of an impact are we seeing on the jobs market? If you remember, one of the warnings the Fed issued way back when they first hit us with a couple of 3/4 point hikes in a row, just smashed it. If you remember, they said there's a chance we may see unemployment jump from what was 3.6 at the time to 5.5%, 2%. That's like 3 million jobs that we lost. But we haven't lost. We've actually added jobs. So the market has shown a fundamental resilience, the strength of the economy. That's why it's important to us to incorporate that into how we evaluate and assess the market. Bob's a subscriber of IBD. He likes it. Love it. What's the extent? How deep will your analysis be? I think we do it pretty deep. We go 6 components. Each component, very specific analysis and routine to evaluate what it means, what the implications are. We look at the data. We look at the qualitative factors. We're fluid in what we're considering. I've said, look, I'm going to keep looking at the weekly jobless claims, but until is above 50 3 weeks in a row and has a 3-week average at or above 270, I'm not worried. Got around it for a minute, never achieved that status. Now we're back low 200s. Great. We watch the jobs report. We keep getting positive surprises. Now, there's times where good fundamental news is bad technical news, right? With the fact that we have strength makes people think, oh, the Fed's not going to cut rates in March, maybe not even in May. So that's where we see the actual price make adjustments to adjusting to the changing expectations. All of that is fundamental. So yeah, now, do I do it daily? Nope, once a week. I monitor some of the components of it, but really I monitor more of the technical components of it. Tailor it to your goals. Align your level of analysis with your investment goals and your risk tolerance. Choose this approach that suits your strategy and objectives. Okay, so let's talk about the risks and the limitations. If you use it, as you use it, what do you need to be aware of? Incomplete information. Fundamental analysis relies on publicly available data, which may be incomplete and outdated, is likely also outdated. It's out. I mean, how long does it take for you to consider it outdated? If the information you're looking at to say this is informing my decision, and you're like, when did that come out? You're like, oh, earnings was a month and a half ago. You're like, that information that everybody's known for a month and a half is what's informing what you're doing right now. There's nothing new, nothing about price, support, resistance, momentum, nothing. I hope you see why we feel technical analysis so critically important. Yes, incomplete, out of date, lagging. Subjectivity, qualitative factors involve judgment and can vary among analysts. So a lot of times when you're looking at these reports, there is also the adjustments in between earnings to analysts' upgrades and downgrades, and subjectivity is clearly a concern. Market sentiment. Short-term market sentiment can override fundamental analysis. If everything's going crazy in a bull market, like the tech bubble, doesn't matter if it doesn't have fundamentals. It's going up. Everything's going up. And if in a bear market, when it starts to crash, did the good fundamental stocks crash in 2000 and 2001? Or only the bad fundamentals? All of them. All of them. So market sentiment will override. So if stock prices deviate and can override, then what does that mean? It means you should always be analyzing stock prices. Price is king where? Technical analysis. Technical analysis. Okay. We have to worry about external factors. Economic shocks, regulatory changes, acts of war, acts of terrorism will impact some markets significantly, particularly energy markets, with where conflicts have a tendency to be. If you're only watching fundamental data, you're going to get rocked around because you're like, oh, you're not looking at short-term price factors. Historical data, fundamental analysis relies heavily on past performance, which doesn't guarantee future results. In fact, most of the time it's not did they meet or exceed expectations, but what are your expectations? Now, it's not like, oh, that's fantastic, you did great. Everyone's like, well, now what? If they say going forward is going to be great, then we're still like, hoorah. If they say, oh, we don't like the way it looks, no one remembers that they just said they exceeded expectations. All they hear is, doesn't look as good going forward. Bam, stock drops 8% on earnings, right? We've seen that. Company disclosure. Yeah, this one's a little bit less frequent, but it still happens. You still have times where they hide things for a while and try to manipulate the data. You can't manipulate price. Price is price. Trades, that's what's happening. Combining fundamentals and technicals, that's the best thing. If you're going to do it, do both. Understand that they do serve different purposes. Fundamental analysis focuses on intrinsic value. Technical analysis focuses on market trends, momentum, cycles. A holistic strategy would be to combine both fundamental and technical analysis for a more comprehensive approach that has you understanding the stock's potential, but then looking at the price analysis to determine your best entries. And again, it's not, everyone's like, oh, you can't time. It's not always about timing. It's about entering at times when you have favorable reward to risk parameters. Quite honestly, I don't necessarily think, I mean, I hope that my technical analysis does. But at the end of the day, I'm building trades so that I can go in it with a coin toss. If I'm 50-50 and I'm averaging 2.5 to 1, that's profitable. Is it that you're so great at picking trades? No, you're 50-50. What are you great at? When you're right, making more. When you're wrong, losing less. Reward to risk, right? It's not about your odds of success. It's about the edge you find with reward to risk. And so technical analysis, we're trying to achieve both of those. Entry and exit points. Use technical analysis for timing entry and exits while potentially relying on fundamental analysis to select strong, fundamentally sound investments. Risk management, integrate both. I mean, yes and no. No, not for me, actually. I would change this. Risk management to me should be based on price action. This should be technical. I guess if information comes out that fundamentally changes, you're going to see it with price if it's enough. So now it's just technical. Don't worry about fundamentals. Fundamentals is to filter. Flexibility, adapt your strategy, shift as needed, and if as a trader you're like, you know what, fundamentals is going to have a back seat here, hoorah, I'm with you. What are some fundamental analysis routines that you could incorporate? First and foremost, your weekly market posture. That's fundamental. I would actually say if you incorporate fundamentals, you would do it at the search level where you say, hey, I'm only going to look for stocks that have high PEG ratios, and maybe you pick a couple of core fundamental principles: high sales growth, high PEG ratio, low PEG ratio, sorry. Right. So you can see how much I use this fundamental analysis. Pick a couple of things, put it in your search, see if it helps filter down, especially in a bull market where all of a sudden you're like, God, my searches have like 50, 60 candidates and I'm having a hard time. Great. Throw two fundamental filters, see what happens. You'll probably be like, oh, that's amazing. And if all of a sudden your candidate starts to dwindle a little, you take it off and say, nah, I only care about price again. Great. Regular analysis. Establish a routine for conducting fundamental analysis weekly, monthly, quarter, weekly. I don't think there's such thing as monthly or quarter. It's weekly. Every week we look at the market, the fundamental components of the market. Are there shifts? Are they strong? Every week we identify some key metrics. What are those metrics? Well, be water, be flexible and adaptive with those metrics. Right now, what are we looking at? We're looking at CPE. We're looking at CPI, PCE. Those are three core inflationary data numbers. We're looking at monthly Department of Labor non-farm payrolls. We're looking at weekly jobless claims. To a lesser extent, we look at job openings and ADP private payrolls. We look a little bit at GDP to make sure that the economy's still cranking along. Right? Those are data that we use. So there you go. Key metrics. Stay informed. Industry news and events. What does that mean? It means let's make sure we keep our ear to the ground so we understand what our traders thinking about relative to the Fed. What is the information that's important, right? Make sure that we understand what's moving things so we update and focus or analysis accordingly. Continuous learning, commit to ongoing learning and improvement. If you're going to do it better. Refine it, simplify it, speed it up, whatever it is. Summary. Fundamental analysis is a potential tool for you to consider. Vital tool. Well, let's not get ahead of ourselves with that glowing adjective, vital. Fundamental analysis, it's okay. No, I mean, it can be vital. It is vital for the market. I keep doing that because I'm like somewhat not big on stock fundamentals. It's a vital tool for assessing the markets. Okay, I was right because that says companies. The markets, financial health, but not necessarily necessary for individual company. Make sure you understand the scope and application and difference between market and stock fundamentals. Market for me, huge. Stock, optional. A holistic approach would be to combine your fundamentals and your technicals. Develop some routines. Make better decisions. That's the key. All right, that's it for today. Question. I gave you 8 minutes. I knew this one would be a little bit short, but I had to do. How do we go back and see recordings? Leonard said. That's a phenomenal question. So, in your emails, there is, I'm going to pull up the template. It's actually, maybe I should put it in. Maybe I will put I'll put it in today. In the Foundations recording link. But in the emails, at the bottom of your email, you have this right here. Core group links, welcome kit, schedule and access, content library, okay? And what that brings up is right here. Here's the content library. So if you go back, we have a bunch of different pieces. We have little 1-minute snippets on various topics. We have trading plan videos. These are about 15 minutes long. These cover each of the components. I still owe one here. Next week's actually. I keep saying I'll do it, and then every week I forget to do it when it's time. But each component of the plan has a video. What are we doing with that plan? How do we define it? What are we doing with our rules? Each piece of the market posture process has a video that tells us how we conduct that analysis. This is the first Trading Foundations course right here. All of the videos of everything that we've done. So you can go back and see psychology, paper trade. You can see here's fundamentals. You can watch the first one and then watch the next one. I'm actually going to put up, I haven't done it yet. I'm going to put up the entire 2.0. I'll have a whole separate section for that. We did an Options Foundations course. There are 8 options classes here. So all of this is full of educational videos that are 100% around the market forecast, or the market watch group, how we forecast, what we do, how we do it, etc. So all those recordings are there. Now remember that those will also take you into our YouTube channel. So let me pull that up here as well. And I actually need to put this, the channel link. Once you get it, you can subscribe and then you'll get updates. I don't even think I'm a subscriber. I should be a subscriber. So here, copy, let's put that. Paste and go. I'll also put it in the chat to everyone in the meeting. Boom, there we go. And so if you look in here in the videos, you'll see all of our previous stuff. There's some new ones that are some little 1-minute snippets, midweek check-in. You can see our last foundation. So you can see there's just a lot of different video resources that walk you through. And so you can subscribe to the channel and access the channel directly. You can access each of the videos through this organizational structure in the content library. This is just the links. This is just to make sure you can always find your way into the whatever meeting right now. We're doing options. We're doing trading foundations through the end of the month. Then we're going to switch to options again in March for the Tuesday, Thursday classes. And then you have the welcome doc. And here you can download things like what's the current watch list? What's our most recent posture? What's the historical posture? You can download the trading plan outline that we use. You can download all of these docs and spreadsheets and logs. It has links that we use. So these three are right. The libraries where all the video stuff is. These are your resources. These are your links. Those are your three gateways into what we have when you're not in the live class. So hopefully that makes sense. I also, I'm realizing I owe you I owe everybody a walkthrough where I don't know, 15 minutes of just like, here's this, here's what you do, click here, do that, just to introduce. And I mean, a lot of you have been with me a while now, but for the new folks coming in, hope that helps. Leonard, let me know if you still have additional questions, but all of that is always, every time that I send you an email, you have the ability to find and see all of this different stuff. So hopefully, I know it's a lot. But hopefully you see the value in this and in what we have, and it's the continuity of how we meet, what we talk about. Anyways, so okay, what else? Any other questions for tonight? Let me know. Where do I start? I would start. Great question. I would start by downloading a trading plan. So the trading plan, where's the trading plan? It's here. I would start by downloading a trading plan. I would start by downloading a market posture blank sheet. I would start, if you're an options trader, I would download an options log. If you're a stock trader, I would download a stock log. So I would start by getting those resources up. That's where you're going to be doing your work, right? You're going to be defining your trading plan, your rules. You're going to be keeping a market posture. You can go back and fill it in using the historical data. But you're going to keep that log, and you're going to go back and I would say log at least 25 previous trades, then start logging all your trades going forward. If you're both stocks and options, do them both. Then get all these links and save them to your favorites, right? You can see here we have get the video access, the content library to your favorites. We have a bullish search. We have so you're just getting started. So what you want to do is you want to go watch an episode of the Foundations on paper trading. Make sure that you have a broker that provides paper trading. Then you get your paper trade account open, and then you can start to trade while you're learning and developing your rules. So that's not a problem at all. We account for that most definitely. So, okay, what else? Any other questions? So, but join us, right? Join or watch the recordings, and you'll see that we're going to help you build a watch list. You don't need to worry about that. We build one, we maintain one as a group. You'll understand why. So one thing you don't have to worry about is where are my trades going to come from? It's going to come from the watch list. We have a list of strong stocks that are leaders in across multiple sectors, right? So we have that's in place. Great. And then you'll see that there's different things that will help you to see, well, what do my trading rules look like? What am I trying to define? Hopefully give you what you need to feel comfortable. Start pulling the trigger on paper, get some paper results, then say, all right, let's go do this thing live. Oh, and also don't forget alerts. We've had some discussions internally about, I'm like, I don't think it's a good service if it's random, like, oh, sometimes it's here. So I was like, well, I think I want to send them always the same. And what I've decided on is that the alerts are going to come out, if they come out, 9 a.m. Eastern time, 30 minutes before the market, 15 minutes before we meet. So this is the first time I'll keep saying it. And there'll be a template. It'll basically be stock information. Most of the time they'll be like knocking on the door, and it will give you trigger information so that if you decided you wanted to, you could try to automate trades and say, hey, if the stock breaks above this level at this point, I'm going to put this trade on. You might learn how to do first trigger and put stops and targets. After the initial order is automated, you could have stops and targets automated as well. So that's how it's going to come out. So, I'm going to talk about exact signals. I'll give you profit-taking levels. Where would I sell a piece? Where would I sell more? When would I start tightening my stop? I want to give most of the information for management at the time. So it's giving you some ideas. It's giving you some ideas for stops, for targets, for triggers. But it also is giving you leeway. So that it's not going to be a stop. It's going to be a zone. If you're more conservative, you'll go a little deeper in the zone. If you're a little more aggressive, you'll go a little tighter. So you'll be able to control reward to risk. It's still going to be your trade, but I'm going to get you most of the way there, right? You're still going to have some responsibility for some of the final details of the trade. I think it's a good compromise to really give some help, but not have you become reliant on signals, because that's the last thing that I want out of this group. Questions, comments, or concerns, initial thoughts? We're about to wrap it up tonight, so let me know. Otherwise, we will meet again tomorrow afternoon, last 45 of the day, right? 3:15 to 4 p.m. Eastern. I'll be keeping an eye on Discord in the morning. But I'm not going to be prepared if there is a signal yet. I have to rework what the template's going to be. I'm going to try to keep a log of all the alerts. The other thing I'm going to put in there is a sample options trade. So for example, if it's a low implied volatility setup and trigger, I might say, oh, you might think about this option, and I'll talk about the risk per contract and try to give you an options head start. Maybe sometimes it'll be spread, sometimes it'll be long options. We're gonna put that out as the initial version of the alerts. Of course, we're willing to listen to your feedback and make iterations as necessary. Awesome. It's great to see everybody. Have a great rest of your night. I'll see you tomorrow. As always, happy trading.